This is part 1 of a series of videos about market internals. This week has been a tremendous learning experience about internals and how to read the market contextually. For more than a year, I've been focused on learning how to read the market instead of trying to rely on mechanical signals to execute my trades. I like to tell you this is the holy grail, but it's not. There's not such a thing as a 100% effective strategy. So reading the market contextually helps to be more accurate with the direction, regardless of the market environment, low volatility or high volatility. Let's talk about how to read the market using the advanced decline line. Let's jump right into it. I'm going to start reading the concept of advanced decline from Investopedia. So advanced decline line or AD line is a technical indicator that plots the difference between the number of advancing and declining stocks on a daily basis. The indicator is cumulative, with a positive number being added to the prior number, or if the number is negative, is subtracted from the prior number. So what this means basically is that is the number of stocks going up minus the number of stocks going down. If you have a universe of 2,800 stocks in NYSE, you have, let's say, 1,800 advancing and you have 1,000 declining, then the difference is plus 800, and that is what is going to be showing here in the advanced decline. Now, here you have the chart of the S&P on the 1 minute and the advanced decline on the bottom part of the chart of the advanced decline on the 1 minute as well. I read this intraday. I don't care what the advanced decline did yesterday. I just care what it's doing real time intraday. Why do I use this advanced decline? This is a breadth indicator. It tells me the overall sentiment of the market, and we're trading weighted indexes like the S&P, the Russell, the Nasdaq. The weighted index is being influenced by stocks with larger market capitalization. For instance, Apple has a 7% weight in the S&P 500, whereas for instance, stocks like Tesla is still a very big company, but it represents less than 2% in the S&P. And then you have companies like Nike, which is still a large company, but compared to Apple, it's pretty small, and it represents 0.35% of the S&P. So you will have situations where a group of few stocks, an industry, or simply a news event on these large companies will move the index towards one direction. But if the market is not supporting the move, at the end, the index is going to catch up with the overall market. That's why we look for signs of disconnection between whatever the S&P is doing, the ES is doing, and the advanced decline. How do we look for disconnection? So we have to look for divergences, right? That's one of the things that I look for, divergences. Another thing that I look for is how steep is the move, and if the advanced decline has a sustained move and it hasn't retraced the entire move. But let's see examples, right? And you see how basically the S&P resembles whatever the advanced decline is doing. For instance, this is a very sharp move to the upside, and the market, it didn't gap up, it just opened up here and started to go up very, very sharply, right? Whereas here, the market gapped up, advanced decline gapped up as well, went up, and the market stayed sideways here. It came down a little bit with the advanced decline. Then you have a spike here, you have a spike here on the index, and so on. So you get my idea. The S&P resembles whatever the advanced decline is doing. Remember, futures is a derivative from a basket of stocks being traded in New York, in the NYSE, in the Nasdaq, etc. Right? In this case, the S&P, the one that we trade, is the 500 largest stocks being traded in the US. I want to show you this first example, which show us the divergence. So you can see here how the S&P opened up, the advanced decline opened and starts to go up, and the S&P starts to go up with it. But then you have the S&P going down very sharply. This move is very, very pronunciated to the downside. And here as well, you can see how the advanced decline is also declining very sharply. But now you can see the disconnection here. You have the S&P going through the opening range and breaking the opening range and creating a new low for the intraday session. In the meantime, the advanced decline is not doing that. The advanced decline is actually creating a higher low right here. Let's say you have a support zone right here. Let's say you have this resistance now becomes support. and you have this area. And when it comes here, now this is a cherry pick example, so you learn and you see very evidently how this thing works. Okay, so you have this divergence, and this makes you like more confident that your area might work for a trading idea. Okay, this is the first example of a positive divergence to take a long trade on the S&P. In this second example, I'll show you a short divergence, and I do have to point out before we see this, I want to point out two things. Number one, look how sharp this move is to the downside, right? And I wanted to show this example because this is one of the most evident examples for a short divergence here. That's number one. And number two, I want to also encourage you to try to take this with a grain of salt and try to focus your attention to key reference areas. If you don't know how to find key reference areas, I'll leave you a video here that I made how to find key reference areas, so you can have areas where are optimal locations for you to take trades, right? And enhance your trading ideas with this indicator, right? The advanced decline. So let's say you have this area here, the market is gap down and then started to go sharply to the downside. Now you see how the advanced decline went down with it very sharply, supporting the overall market, supporting the move to the downside. Okay, now, but you know, closing the gap is a very sensitive area to take a short, so you mark up this area. Now the market started to retrace to the upside, and the advanced decline is not supporting the move. Yes, it's bouncing, but it's mostly sideways. You see here, mostly sideways. So what happens when the market started to bounce, being propped up by a few stocks for sure, and then got to the gap close area here? Look at this. The market was creating a new high because we opened up here. Now we're creating a new high. Bunch of people are thinking this thing is gonna go higher because the market is just bouncing and create new highs, right? High, higher high. This is a second higher high. But look at the advanced decline. The advanced decline is not supporting the move. The advanced decline is simply, just to have a good visual, look at this. How steep is this slope? How pronunciated is this slope, right? So you have this area, and then what happens with the advanced decline? Start to go sharply down again, right? And the overall, the S&P future starts to collapse. In this sense, there is a larger move for the intraday session. It went down like around 50 points. Let's go to the next example. Here is not as evident as the previous example, but you have you see how the market starts to go up and here starts to go down, and even this one creates a lower high when this is a similar high here, and the market starts to sell off. And now I don't know if you have a key reference area here. If you had an area to go short off of this area, well, you have this pivot, 1, 2 pivot, probably this, right? And then market starts to sell off here, and then it never comes back. Even when the advanced decline is going sideways, well, the market is going sideways with distributing price here until we close towards the lower part of the session, right? So this is the third example. I do think you need to take this with a grain of salt. Try to practice before you include this into your trading plan to see if it fits to your psychology. I certainly found an edge in this, and it has helped me reading the market better in that sense. Okay, so with that, I'm gonna wrap up this video. I hope you like it, and if you find value, please give us a thumbs up and consider subscribing to the channel, and I see you in the next video. Bye.